Okay, hello everyone. Welcome to the Ichimoku Cloud or the Ichimoku trading system. My name is Will Little. I am a general partner at Proto Ventures. We invest in early stage companies, provide tangible help, provide capital to get them off the ground and get them into seed funding position. We also help innovation departments at medium to large size organizations and helping them get their ventures off the ground as well. So this video is basically a quick little heads up about a indicator system that I've been using since Q4 2017. 2017 was a pretty wild year for the crypto markets, for those of you that remember. And I had a number of friends tell me about this simple indicator system that are into trading. I am not a professional trader. I am extremely new to all of this, but I have been trading it for a few years, and I've learned a few things about how the system works, and I'm happy to share those insights with you today. So first of all, what is Ichimoku? What is this cloud? What are these indicator lines? What's going on here? So backing up, Ichimoku was invented by a Japanese journalist in the late 60s based on Forex trading and various public markets that had a start and a close, that didn't trade on weekends. And he, over 30 years, developed a indicator system that worked extremely well for him. And we now use this in the crypto markets slightly differently, and I'll explain what that means. So what are all these different lines? So I will link to resources and show notes, but I'll just very briefly go through them now. They are based on a sequence of candles, and for those new to trading, candles are essentially a quick way to look at, in any period of time, what was the trading behavior and the trading numbers in that period of time. So right now we are looking at the Bitcoin against the US dollar for 4-hour candles. So it's between today, August 11th of this recording, and you could see back here to July 24th, July 23rd. So this is the history of the Bitcoin trades. Obviously, the last month it's been a pretty nice bull market, and Ichimoku is actually a very quick way to indicate and see just how much of a bull market it has been. So diving right in, you'll see this blue line, this red line. You'll see this green line and red line indicating the cloud. And you'll see this little trailing green line back here that I don't use a ton, but I'm happy to tell you what it is. So this blue line is essentially a short trend line. It is X number of intervals, and I'll talk about what that number X is here in a minute. But it's X number of intervals in the past, indicating the average of the high and the low. So if you take the high and the low over X number of intervals in the past, that's the blue line. The blue line is called the Tenkan-sen. This red line is called the Kijun-sen, and this is a longer period in the past, the average of the high and low. So a lot of Ichimoku is paying special attention to the Tenkan-sen and how that is related to the Kijun-sen, because if Tenkan-sen is above Kijun-sen, then you are in a situation where the price is moving up, and how it relates to the cloud here is important. I'll explain that here in a minute. So the average, so the way the cloud works in the whole indicator system is it shifts a certain number of periods into the future. So the top of the cloud, when things are trending upward, is called the Senkou span A, and the bottom is called the Senkou span B. So this green line is Senkou span A, red line is Senkou span B. And what Senkou span A is simply the average, or the middle between Tenkan-sen and the Kijun-sen projected a certain number of intervals in the future. And what Senkou span B is the long trend line, a longer period of the average of the high and low projected a certain number of intervals in the future. So that gives you this cloud. So when things are trending upward, the cloud is typically shaded green. When things are trending downward, this cloud is typically shaded red. So red cloud essentially tells you you're in a bear market. A green cloud tells you that at least at some point in the past you were looking at a bull market, and the transitions between green clouds and red clouds are often indicators of getting into a long or a short position. Transitions between the crossing of the Tenkan-sen with the Kijun-sen are often indicators as well. The price coming up against a Senkou-span A or Senkou-span B or a Tenkan-sen or a Kijun-sen, those are often support lines or resistant lines for price action. And it's actually quite a fun way. So professional traders I've talked with about this often sort of nod their head and say, yeah, there's actually a lot packed into this simple indicator system that is an important part of many traders' tool chest in terms of how they go about using it. So the purpose of this video is just to laser beam in on this particular set of indicators. So like I said, I do not use the Chinku span, this trailing green line here, very much, but traditionally, if the Chinku span is above price and you have a TK cross, which is the Tenkan-sen will cross the Kijun-sen, which is down here, you have a very small cloud, you have a cross. This is a classic, and the Chinku span is above price. This is a classic buy signal to get into a long position. And vice versa, if these two lines were to ever cross and you were to have a reverse, then this would indicate that the price would probably start entering the cloud. You don't typically, traditional advice is you don't make trades in the cloud. It's super turbulent in there. Probabilistically, you don't really know where things are going. So I'll get into that here in a minute. What Ichimoku does is, in these settings that I use, is we have a setting for 20. So these are 20 candles to the left. The average of the high and low is the Tenkan-sen here, this blue line. And these numbers are higher than you'll see when you read about Ichimoku Cloud on the internet. And I'll link to a bunch of show notes. I'll link to a bunch of resources in the show notes. But you will see that these are higher. And the reason for that is because crypto trading happens 24/7, whereas this system was developed with a traditional market open and a market close and no trading on the weekends, etc. So we looked at longer periods with the Ichimoku Cloud, given the 24/7 nature of crypto trading. So Tenkan-sen is set at 20. The Kijun-sen, the red line here, is set at 60 periods. So you can see in this market is clearly going up. The blue line, the Tenkan-sen, is going to be the closer trend line for 20 periods. The red line is going to be the longer for 60 candles in the past. The 120 is the Senkou-span B, is this red line at the bottom here. So this is for 120 candles in the past, the average of the high and the low is the bottom of the cloud. And like I said earlier, the Senkou-span A is simply the average of the Tenkan-sen and the Kijun-sen projected forward a certain number of periods. That certain number of periods is 30. And so 30 is how much the Senkou-span A is going to be projected in the future. We do the same thing, importantly, with the Senkou-span B. So Senkou-span B, this cloud here, is also projected forward 30 candles as a way to give us an indicator of where things might be heading in the future. So these are these settings. You can use tradingview.com to set these up and customize this however you want. So taking a step back, I think I want to call attention to two books that are important when thinking about how to make decisions in general. The first book is from Annie Duke called Thinking in Bets. She's a professional, or was a professional poker player, and she examines how all of life decisions, whether it's what you're going to eat or who you're going to hang out with or what job you're going to take, have a certain probability with regard to an outcome that you expect or don't expect. And our brain's ability to make decisions based on how we think about probabilities is a pretty messed up and flawed system. And we often will look at outcomes and have that sway whether or not we made a good decision. A good example is Super Bowl a few years back. Seahawks were about to win. A call was made to pass the ball. Interception happened. Seahawks lose the Super Bowl. Everyone said, oh, that was a terrible decision. But if you really look at it, the decision wasn't bad at the time. Probabilistically, they probably should have worked. And the Seahawks probably should have won the Super Bowl. But the way our brains are wired, because that was such a terrible event that the Seahawks lost, we tend to think that, hey, that was a bad decision, when in reality it was actually probably a good decision. But in the poker language, that was a bad beat. You had small odds of losing. Those small odds hit. Hey, it happened. So this indicator system, in my mind, is essentially a way of just putting some unknown probability on where the price is going to trend toward. You can determine those probabilities yourself, but if you stick to it, you stick to your own system using Ichimoku or whatever you want to use, then professional traders, that's often where they will make some money, is by sticking with their system. So the second book I want to call to attention is called Thinking Fast and Slow. Kahneman won the Nobel Prize thinking about cognition and explaining how our brains work. And very, very briefly, I'd highly recommend this book, but very briefly, we have a instinctual system of thinking. That's what he calls our FAST, or system 1. And that's essentially, if you're posed a question like, what's 1 + 1? Most people understand it's just 2. And you don't really think about that very much. It's just instinctually, you have a fast way of assessing the answer to that. Whereas if you ask a question like, what's 17 times 24? Well, most people don't necessarily have that in the immediate memory and the ability to think fast about that answer. So you're going to have to go through some algorithm that you learned in grade school or whatever to come up with the answer to that. And that's the slow brain. The slow brain is pretty lazy. It likes to let the fast brain, or the system 1, do most of the thinking for us. But occasionally we have to do some harder cognition work, and that's our slow brain. So this book dives into all the implications of all that. But I pull up these two books to say that when you're trading crypto, which is extremely volatile and could go way up or way down at any moment, there is certain probability that you can use indicator systems like the Ichimoku trading system to give yourself a probability that something's going to happen, and then you could make your bets based on those probabilities however you see fit. So with that, I will basically leave you with maybe two classic signs for long and short positions. Like I mentioned earlier, a pretty classic sign for when to buy into a market is when you have the blue line crossing the red line here. When the Tenkan-sen crosses the Kijun-sen, that is often, but not always. Again, these are just probabilities assigned to all of this, and who knows if most of this is placebo. But I and many others have been looking at this for a long time and applying it to crypto, and there are definitely some trends that are happening here. And I basically liken this to, whether it's humans or computers. Most of this now is algo trading, so these are computers acting. There's a certain response to either news about a particular market or a certain behavior that happens that's typical. So if you just think about a party, or you think about a music festival, there's a certain cadence that a crowd will have and react to certain events that happen. And that's the analogy that I use to markets. Markets will behave a certain way based on how things are flowing, and they'll respond to news, whether particular news about Bitcoin or particular news about any particular coin that you're looking at. and it will ebb and flow and go up and down and react a certain way. So I've found that Ichimoku is extremely powerful with regard to predicting where price is going to go in the short term, and even potentially in the long term, depending on what candles you're looking at. Okay, so finally, last thing I'm going to tell you about is what am I looking at here in particular? Right? Here in particular, I'm looking at the Bitcoin to USD market, and I'm looking also at Cosmos Atoms to USD, as well as Cosmos Atoms to Bitcoin, because most coins besides Bitcoin will often follow the price of Bitcoin, but in periods where the coin itself is trading above Bitcoin or below Bitcoin, those are times to watch and be careful and note what's going on. So I would highly recommend. I'm a huge fan, if you've been following my work, of Cosmos Atoms. Cosmos is a new proof of stake blockchain that allows application developers to build their own blockchains. They call themselves the Internet of Blockchains. And so I am generally bullish about the Cosmos team and the community there. So I'm happy to trade their coin, knowing that if a large decrease in price were to happen, I am in the crowd that is bullish that price will eventually go back up. So I'm happy trading that coin. Same with Bitcoin. So whatever coins you're into, whatever networks you're into, I'd recommend just finding one that you're bullish about, and then if you want to try to trade that to see if you can make more money than just holding it. That's kind of a fun little game to play. Some people obviously take that way more seriously than others, but I approach it fairly lightheartedly, knowing that at any moment this whole thing could crash and you can lose all your money. So I will basically, when I'm making trades, let's say I'm trading atoms, I will take a look at Bitcoin, I will take a look at the 4-hour chart, and I will look at the 15-minute to see what's going on in the short term. So here, price is below cloud, Tenkan-sen is below Kijun-sen, things are trending downward. And what I will immediately glean from the 15-minute chart is the people are freaking out a little bit and they're selling, or the computers or whatever algo. And there's going to be some pressure for this price to go back up. So, and what I mean by pressure is that there's basically, I will often see the price get back to the Tenkan-sen, to this blue line. So the way I think about it is that there's a certain amount of pressure to come back to the blue line, and that's fairly strong. There's a certain amount of pressure to come back to the longer trend line, the Kijun-sen here, and then a certain amount of pressure to come back to the cloud, to come back to these longer trend lines as well. So obviously anything can happen. Nobody can predict the future, but some piece of news or other could come, or some huge whale could sell off a bunch of their Bitcoin, which affects all the other markets, and this thing could just tank downward at any moment. But in general, all things being equal, there's some amount of pressure for this price to go up a little bit based on the Ichimoku system. And how much pressure that is, you can determine yourself based on the own probabilities that you're going to give to your trades. So now, importantly, the 15-minute chart is not super predictive and not super powerful. The longer your candles are, the more powerful each Ichimoku system gets. So that's why I'll often look at the 4-hour chart to kind of see where we're at. So obviously, Bitcoin had a nice bull run here, and then there's some cooling off back to the Kijun-sen. Now, interestingly, the Kijun-sen and the Sequence Span A are right here. So this is a pretty classic support level that I'd either expect this price to bounce off and start heading up, or if it really breaks through into the cloud, I will often see the price go all the way down to the Sequence Span B in some period of time, usually pretty chaotic, and sometimes it'll bounce off the bottom of the cloud and then head back up and similar ways. But sometimes if it goes below the cloud, then you're really kind of heading into the bear market territory. So if you wanted to be aggressive, you'd say, hey, this may bounce off, and so I want to go into a long position here. And so what I'll typically do is then look at the 15-minute chart and say, hey, when is a good time to go in based on the very short-term market, especially if I'm interested in doing some kind of day trade or something. And so that would be, typically I would say right now, even just at the time of this recording, this is potentially I'd assign some small probability that this is a good long trade. And so I'd probably put in a little bit just to give it a go. And that's that. Now the reverse is true. Often you'll see a nice little spike in price, and price will get way above cloud. It'll get way above the Tenkan-sen, way above the Kijun-sen. And so, especially if the cloud is red, there's going to be a lot of pressure to come back down. So this is classic crypto. This is a classic crypto move where you will see a drop in price, and this, if this price is, this is basically a 4% drop in 15 minutes, and that happens quite typically. And the Ichimoku can basically tell you, hey, such a thing might be coming. Again, probabilistically, who knows what the actual outcome is going to be? But this is a way of teeing up your own assignments of probabilities to where price might be heading. Okay, I will end with that. Feel free to ask any questions. Shoot me an email, just will@wclittle.com. You can go to wclittle.com and subscribe to my newsletter. I write about technology and startups and software development and crypto and a variety of other technical topics usually. And love to have you chime in, and happy to talk about any of this. So thanks for watching. I will talk to you all later.